Hey there, everybody. Thomas Wood here with Basecamp Trading, and we're going to take a look at one of my favorite price action setups to trade, and that's what I call a run on stops. So the way a run on stops setup works is we need to have a couple different things going for us. First, we need to have a pivot high or a pivot low. This can be both a bullish or a bearish pattern. Once we have a strong pivot high or a strong pivot low, what we look for is for the market to break through that support from that pivot. So for example, here, we have this pivot low, we break through it, we immediately reverse, and we close in the opposite direction. Okay, so it's dropping through that support, knocking out all the stops below it, and immediately getting bought back up the opposite direction. Or if it's bearish, it would break through a resistance level. For example, here, where you broke through that pivot high, or up here, where you break through this pivot high, immediately reversing, closing the opposite direction. And that sets us up for a potential run stops. Then the trigger for that setup is a break of the low or a break of the high of the previous price bar, and that signals the potential entry. Now, the other potential entry, especially if you're trading equities on a daily, is we'll look for an entry right at the end of the day, and that's more aggressive, and we'll put on a starter position. We don't want to go full size, but a starter is okay because we're looking for that market to potentially gap the next day. So let me show you a couple examples of how this has happened here recently. If you look at Tesla on a daily, we had a really nice run of stops down here a few days ago where we had this strong pivot low. We break through the pivot low, immediately reverse, close back up with a hammer pattern that triggers, and we proceeded to bounce the next couple of days back to the upside before rolling over and obviously coming back down. The next one we can look at here is, if you take a look at NVIDIA, we had another really strong one set us up. And again, this is just giving us direction for the next price bar or two. It doesn't necessarily mean a full-blown reversal. We need more to go in than just a run on stops to signal a reversal. But you can see here is our run on stops set up. Here was our pivot low, strong support. We broke through it, get bucked back up, close with a hammer. Triggers the next day, had a really nice up candle falling through there. Another example of this, to the downside, we had a couple that worked out really well. We had Amazon on a daily. And we come back here and you look right here. We had this strong pivot high up here previously. We ran through it, immediately reversed, closed with a shooting star pattern, closed down. We trigger the next day. Nice big sell-off coming from there. And then another example is Google. We did the same thing all the way up at the highs here, where we had a strong pivot high, break through it, immediately reverse, drop right back down. So again, it triggers as soon as it breaks the low or as soon as it breaks the high to the upside, and then our stops get placed beyond the high or the low of that signal bar. So our stop, for example, here would be up there above that bar's high. So we'd be selling here, and our stop would be up here. And then we look for follow through to the downside, at least for, like I said, a day or two at a minimum, and potentially a few days after that. So keep an eye out for this. One of the other things you can pay attention to kind of confirm these types of setups is if you get really big volume on the reversal. So it spikes and then reverses hard with heavy volume, or you see it break, and as soon as it breaks, you see it immediately reverse. And I mean, like within a matter of minutes or even seconds, sometimes it'll reverse and go right back the opposite direction. Because what's happening is there's a market maker or someone on the other side of this trade, and what they'll do is they'll drive it up. They'll have sell orders up here where everybody's buy stops are located. They'll have sell orders at the same space, so it'll run price up, knock out everybody's buy stops. They'll have their sell orders in place. They'll get a really good fill and drive price right back down. And I know this happens because I've talked to previous hedge fund managers and stuff that I've worked with that have told me they've seen it done in the pits and stuff for futures trading. So keep an eye on it. Again, this is what I call a run the stop setups. Really good opportunity when you see it. But that's it for today. Hope it helps. And until next time, everybody, happy trading.